down 34.7% in 2022. Is Chewy stock a buy for 2023? I'm going to answer that question in this video, so stay tuned. The first thing I'm going to look at here is Chewy's quarterly year-over-year revenue growth. And what we saw throughout 2022 is a deceleration of their revenue growth. Of course, the e-commerce retailer thrived in the beginning of the pandemic when brick and mortar stores were closed and people were looking to avoid shopping in person. Online sales exploded, and now it's kind of slowing down a little bit as people are reverting to some of their pre-pandemic habits. Still, it was impressive that Chewy maintained double-digit revenue growth throughout the year, even as customers kind of reverted to pre-pandemic behaviors. The next metric I want to show is Chewy's quarterly revenue and Chewy's quarterly expenses, total expenses. And what you see here is a steadily rising trend, which is good news if you're looking at revenue, but it's not very much good news if you're looking at both of them combined, because what I like to see for fast growing companies is a leveraging of their fixed cost base. So when revenue grows, I want to see expenses grow. I don't want to see expenses grow just as quickly as revenue is growing, because what's the point in that, right? If you're making more sales but it's costing you just as much, you're kind of not going anywhere. You're circling in place. What I want to see is revenues grow and expenses grow a little, maybe if they have to grow slower, and so to create more of this kind of margin expansion, which I'm not seeing with Chewy here in that regard. All right, the next thing I want to look at here is Chewy's cash flow from operations quarterly, and this does show a nice healthy upward trend. Of course, there is going to be fluctuations. That's just business. There is seasonality here, but if I was to draw a line from the beginning to the end here, you can see a steadily upward trend for Chewy, and that's good news if you're thinking about investing in the stock, because even though net income may not be expanding because expenses are expanding, there can be some non-cash expenses in there like depreciation as the company's investing in the warehouses, fulfillment facilities, and that sort of thing. Those are things that, it spends the cash up front, and then as, they go forward, that's going to be cash flow coming in. So that's good news to see from an investor standpoint, that the cash flow from operations is rising. All right, the last thing I will look at here is Chewy's price to sales ratio, and it exploded throughout 2020 and in the early stages of 2021 to over 6, right? And that's for the reason I mentioned earlier. People were spending more money online. Chewy's business was thriving, and so people were really optimistic about Chewy's prospects, including myself. One of the reasons I was really optimistic about Chewy's prospects, and I've since kind of moderated my enthusiasm on this point, is that, you know, a lot of their customers came to Chewy because they adopted pets during the pandemic. People were spending a lot of time alone, away from people, and so they adopted pets to kind of make the time go by and not be as lonely. And I thought that this was going to be a long-term commitment, right? Cats and dogs, they live for 10, 15, 20 years sometimes, right? So I was thinking that's a customer that they gained during the pandemic that's going to stick with Chewy for 10, 15, 20 years. Unfortunately, what I've started seeing in the data is that as economies started reopening, is there was an alarming trend of people returning their pets, right? Taking their pets back. And that was alarming to see. I thought people were going to keep these pets longer term, and so that's caused a sort of decrease in the number of customers. And I started to see the evidence of that in Chewy's results. I started to see, customer growth slow down and came to a screeching halt. And what that tells me is a lot of the customers that they added during the pandemic are no longer customers with Chewy, as they're adding new customers, but they're losing some of those older cohorts. And that caused me to moderate my enthusiasm for Chewy stock, is that that change between thinking, okay, these customers are going to be long-term 5, 10, 15-year customers, and what's happening is a meaningful portion of them have turned out not to be that kind of long-lasting customers. So looking at their price to sales ratio of 1.7, significantly down from where it was, um, and trying to answer, is Chewy stock a buy for 2023? I'm still going to say no. Chewy is getting closer to becoming a buy. However, the first quarter and second quarter of 2023, I believe, is going to be a challenging one for e-commerce companies, especially ones that handle fulfillment and logistics like Chewy does, because the cost of handling that fulfillment is going to be very expensive. And so for that reason, I would tell investors to hold off on buying Chewy stock at least for the first quarter of 2023, and let's revisit the stock around the end of the first quarter before the start of the second quarter, and I'll update you all to see if it kind of went through these challenging times, and if costs of fulfillment have dropped enough to where Chewy's prospects are better are not so challenging in the near term. All right, so that's all I've got for this video. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.